Gold is expected to remain a strong performer in 2025. According to George Milling-Stanley, one of the most respected figures in precious metals, the metal could surpass $3,000 an ounce this year. Economic uncertainty means you have to keep up with what's happening. Make sure you subscribe and we'll keep you in the know. If you don't know who George Milling-Stanley is, not only is he a chief gold strategist, he is a 50-year gold veteran helping people understand what's happening with the markets. He believes gold prices will continue to rise. One of the factors, he says, is central bank gold demand, even at the current price levels. Central banks have consistently increased gold reserves over the past 3 years, driven more by long-term strategy than short-term price concerns. A major driver behind this trend is de-dollarization. Milling-Stanley points out that in 2022, when the U.S. put financial sanctions on Russia, that ignited global gold purchases. He clarifies that since Russia's initial incursion into Ukraine, gold has climbed nearly 40%. He also adds that while Trump's re-election has raised hopes for an end to the conflict, that likely would not mean an end to de-dollarization. An end to the conflict would certainly be welcomed, but it doesn't mean the global push to reduce the dollar's dominance will go away, or that countries will slow their efforts to de-dollarize their central bank reserves. In his assessment, central banks have come to view foreign exchange diversification as a matter of national security, with the strategists also emphasizing the impact of rising geopolitical tensions and moves by certain countries to reduce the U.S. dollar's dominance in trade and global finance cannot be overstated. The World Gold Council's latest survey backs this up. Most central banks expect gold reserves to grow as the dollar's influence declines. Milling-Stanley explains, gold's inverse relationship with the U.S. dollar also has been misunderstood over the years. Since 1973, gold has posted average cumulative returns of 133% during U.S. dollar bear markets and minus 9% during periods of dollar strength. He added, history would suggest that over the long term, the benefit of holding gold to protect against currency weakness has the potential to outweigh any drag from currency strength. In fact, the U.S. dollar is as strong today as it was at the turn of the century, while gold has appreciated 813% in the same period. Milling-Stanley highlights that gold demand from the Asia-Pacific region, particularly China and India, remains strong, driven by its role as a hedge against inflation. Gold funds and ETFs in the region have expanded rapidly, reflecting growing investor interest and rising wealth. Lastly, the analyst highlights that America's unfavorable fiscal outlook could fuel gold in 2025, especially with rate cuts on the horizon. During George W. Bush's presidency, gold climbed over 220% as government debt surged and the Fed kept rates low. The analyst explains how a similar pattern could emerge, especially if the new administration's policies drive up deficits while loosening monetary policy. Since 2000, gold has risen over 800%, including a 45% gain in the last 3 years, even as the Fed raised rates by 525 basis points. With central banks continuing to buy, geopolitical tensions lingering, and fiscal uncertainty ahead, the legendary strategist says gold price could move as much as 17% higher from present levels to $3,100 per ounce. It's great to hear another analyst bullish on gold for 2025. It's important to understand that anything can happen at any moment. In fact, a Fed governor just released a statement saying that the market is priced to perfection and could drop at any time. With all that in mind, you need to be prepared. Watch our video 2025 and your savings to best understand your options so that you can bulletproof your retirement.